All right, everybody. Hello, ladies and gentlemen. Welcome to Nadex. My name is Philip, and I will be your presenter for today's webinar, How to Trade with Precision, a Precise Trading Strategy. If you have a look at your webinar interface, you can see that small questions box. And right now, I would appreciate a very short yes or why in that questions box, just to let me know that both the audio and the screencast are working properly. For you guys to see that the screencast is working, I just switched to the second title slide. Thank you very much. Answers coming in. We're looking good. Perfect. Thank you very much, everybody. Today's session is scheduled to run for about 1 hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you guys aware of. So please take your time to read through them carefully and make sure that you're comfortable with them before continuing with the webinar. All right. Essentially, this says that trading, of course, involves risk, and that you should understand these risks and the risk associated with the instruments you are using before you're getting active in the market. Neither Trade with Precision or myself are investment advisors, and therefore nothing we say should be considered to be actual investment advice. Essentially, what we provide to you guys here is education. So all examples, all the charts, everything we show you is shown for educational purpose only. So please make sure you're okay with this before continuing with the webinar. And of course, we have also a risk warning directly from Nadex to you. So please read through that one as well. And now, as you are all still here, which I appreciate very much, thank you very much for tuning in, let's get started. Trade with Precision has been founded in 2006 by Nick McDonald, and we are providing education for retail traders. But not only for retail traders, we also provide international trader training for clients of global brands, including exchanges and brokers worldwide. Our partnership with Nadex to provide you guys with good education started back in 2011. And we are a company run by traders for traders. You will probably have realized by now that I'm not a professional presenter. I'm sorry about that. But I'm a professional trader, which means I'm trading my own account with my own money every single day, especially with those strategies that we're teaching you guys here. This is not only true for me, but also for all my other colleagues here at Trade with Precision as well. We are specialists in trading strategy. The market is not important, the time frame is not important. It's the strategy that takes center stage, and this is really at the core of all our trading and at the core of our educational success as well. Nadex, of course, is a derivatives exchange subject to regulatory oversight by the CFTC. Especially in the binaries option market, I think it's really important to pay close attention to where you're trading. And here at this exchange, you are becoming a member at the exchange, and it's well regulated. It's based in Chicago, financial heart of the futures and option markets, CBOE, CME, big names, big exchanges, and that's what Nadex is also, of course, for the binaries market. Newly formed in 2007, and all the contracts are settled in cash, so you never have the risk of physical delivery. When you're trading futures and options on futures, it can sometimes be a little bit intimidating if you're not paying close attention to those contract specifications. You might end up with having to take physical delivery, and usually that's not so enjoyable. So there are blocks and circuit breakers in that futures trading system, but of course here, when those contracts here at Nadex are being cash settled, no problem at all. This aspect to worry about is really just off the table. Here at Nadex you can trade two unique vehicles, which are of course binary options and spreads. So it's important to not only have access to those markets when you're sitting in front of your desk, but also, of course, today everything is mobile. You have to be able to access your market and access the markets, access your positions, access your portfolio, monitor your positions, and react upon new market conditions in real time when you're on the go, when you're on the move. And of course, you can easily do this here at Nadex. No matter if you are an Apple guy if you have Android devices, Windows Phone, Nadex has got you covered. You gain fast, secure, and flexible access to your account and to all trading opportunities directly from your mobile device. So just in case you haven't done that so far, let me just give it a try and let me test this. Let me please do just quickly another short audio check. Garrett is telling me that he's not able to hear what I'm saying. Is the audio working fine for you guys? Okay, Steven's telling me, thanks Brian, thanks Mark, everybody, perfect, thank you very much. So, yeah, I just carry on and hope that Garrett will fix his issues there as it's working for everybody else. Sorry about those issues there. So, let's have a look at today's agenda. We want to start with a very quick overview, 7 critical trading errors and how to overcome them. Then we want to focus on how professionals manage risk. Of course, risk management is one of the major strengths of trading binaries. But binaries are really just another trading instrument. And you have to understand when you want to trade and what you want to trade. And then picking really just that instrument, that's the second step. The first step is always you must have a plan to address that market and decide if you want to do nothing, which is a perfectly viable trading decision, or if you want to go long or short. And then you decide which instrument you want to take. Technical trading strategy, why you must have one. And many people mix up trading strategy and technical analysis. Yes, I'm using technical analysis. Yeah, that's okay, but what is your trading strategy? Yeah, I'm using Bollinger Bands. That's not a trading strategy. I'm using candlesticks. Not a trading strategy either. Trading strategy, I don't want to talk about this stuff now. We want to show you a precision trading strategy which is applicable to any market and also to any time frame. Everything we show you guys here today is really just a very brief and short glimpse at what is being covered here at Nadex in the advanced education course. And no worries, I'm not trying to sell you guys anything. If you're a member here at Nadex, attending that course is completely free for you. So everything you will see here today, rather briefly, you will learn about this in great detail in this advanced education course. So let's get started with our 7 critical trading errors. You are lacking a proven trading strategy with precision entry, which means, of course, it must be repeatable. You must know exactly in advance when you want to get into your trade and out of your, not only into your trade, but also out of your trade. Those exits are also very important. And you have to have a precise plan. It has to be repeatable. Second thing is you want to focus on traditional chart patterns instead of trends. That's not working usually. Patterns are really nice and important, and if you want to put it that way, what we're looking for when we're trading our strategies, we're looking also for a certain type of patterns. But those patterns always occur within a certain context, and this context always is a trend. If we see this pattern but don't see the context, the trend that is giving me the proper environment for my strategies to be applied, to be working, to have a high probability of success, then I just can't trade that pattern. So patterns are important, but trend is king. Trend and price action, everything else is just icing on the cake. I already talked about stops or take profit targets when we talked about the entry, that this might be fuzzy at times. Same, of course, is absolutely true as well for the exit. Every time you are in a trade and you have to make decisions, your mindset might influence your decision-making process. You are not as sound, not as rational as you usually are and as you could be. So making decisions while you are in the market is often a challenged environment. We want to take this challenge off the table. We want to make all decisions before we enter the market, when our brain is working as best as possible. Of course, I already mentioned high probability setups. High probability does not mean and will never mean that every trade is going to be a winner. There will be losing trades, with our strategy, with all other trading systems that I know, and that's just part of the game. It's always about trading. Being a successful trader is about winning more often than you will lose, and you will lose. And it's about having bigger winners than the money that you lose on that losing trades. And those two factors together, they give you an edge. They tweak the expectancy in your favor, and this is what makes you a successful trader in the long run. If you're just looking for that system with no losing trades, every shot must be a winner, that's searching for the infamous Holy Grail. It doesn't exist. You have to accept that there will be losing trades. And again, this is where mindset comes into play. If you have 4, 5, 6, 7 losing trades in a row, which can absolutely happen, that's just part of the random nature, the statistical nature of trading. Usually people will grow really worried and they say that the system is not working and I have to change something, and that's when they jump ship. That's when they move to the next system and look for that Holy Grail. You have to understand the statistics behind trading, and again, this positive expectancy, winning more often than not and winning bigger than having losses. That's what giving you that edge. Black box trading, not knowing what that system is doing and just telling you, you have to buy now. At least I want to know what I'm doing. We talked about this already, thinking that trading is solely about picking winners. It's not. It's about having a positive expectancy, having an edge in your trading. Next big issue many people have, they focus only on one market and overtrade that market. I'm just trading the S&P 500, I'm trading the E-minis, and that's it. I'm not interested in the Dow, I'm not interested in gold, in silver, in crude oil, in forex, in whatever. There are tons of different markets out there. Why just focus on one market? We want to have trending markets. We want markets with good, strong momentum. And if my home market is not giving me that, why limit yourself and not take opportunities somewhere else? Lack of emotional control and discipline. Trading is very different from everything else probably that you have done so far in your career. If you're a pilot and you put your plane safely on the ground, you're a good pilot. The result of your actions, landing that plane safely, can be directly attributed to your performance as a pilot. Result is linked to your performance. With trading, the outcome of one trade is random to a certain portion, and therefore we cannot make that link. And for that reason, it can be very hard to just keep on trading. You have to make sure that you execute your trades flawlessly and just carry on. But that's the major thing. You have to stay focused and carry on and not be distracted by the results. The results are random, but you should have that edge. You can just focus really on flawless execution, and having proper emotional control and discipline is really key here. Very challenging. I think that's one of the major parts why many traders fail. They are not able to really take a hold of their emotions when it comes to trading. Everybody, at least at one stage in their trading career, has been subject to those errors. Keep an open mind, see what's going on there, and if you realize, yeah, there's something for me to be improved, perfectly fine, carry on. If you're thinking, no, that's not me, please look again. And the good news is trading can be learned. Trading is a craft. You have to practice that craft to grow, but it can be learned. So what is the secret to trading success? If it's not about picking winners, what is it? The secrets, and there are two, are actually not secrets at all. It's just new traders tend to ignore them. It's just not that part that is looking interesting or is looking cool or fancy or something like that. It's risk and money management. Sounds rather boring. This is what makes sure that no matter how you trade today, how much of bad luck you have today as with your trading, you will still be in the game tomorrow. You can come back to your desk tomorrow, log into your account again, and you can try again. And this is what risk and money management does for you. Maybe you have lost today, but you can come back again and try tomorrow. And in the long run, things should probably work out for you. Emotional control and trader mindset. It's so powerful what the subconscious mind is able to do and is able to tweak your trading. You're not aware that it's happening, but it's happening. Be sure to take control of your emotions and have a positive, motivated, forward-looking trader mindset. Really key factors. At first, when I got started with trading, I sneered at those points and thought, hey, come on, I want to trade. It's not some psycho mumbo jumbo. No, it's really there. It's really crucial. You have to be in that zone, as Mark Douglas called it, and you have to be, as I call it, my happy place to be a successful trader. So, how do professionals actually manage risk? Professional traders agree that risk management is first and foremost the most important thing that has to be done. And also they have a strategy of which risk forms a simple yet crucial part. If you cannot take credit for the outcome of a trade, or you can't be blamed for the outcome of a trade, the only thing that you can do and can accept is that you have executed your trading strategy flawlessly. You paid attention to all the rules, you checked everything, you checked for news announcements and so on, and in the end, all boxes have been checked, everything looks great, then you have executed the trade flawlessly. And this is the only thing that you can control and you must focus on. Executing that strategy flawlessly. Risk management, position sizing. Here at Trade with Precision, we risk a maximum of 1% of our capital per trade. This means if I'm trading a $10,000 account, I'm willing to risk 100 trades. I'm willing to risk $100 on one single trade. If that trade didn't work out, okay, my account is down to 9,900. That's many people think this is not enough and you can never grow your account by trading just a 1% risk of that account. That's not the case. It's really, we can, and I think we do this also in the advanced course, we show you examples of compounding and how this can really actually grow quite nicely and quite fast. And 1% definitely is not too little to be risked and to be traded. The good news is that with Nadex here, risk management is rather straightforward. If you're trading normal products, you always have the risk that the market could gap against you and that you have to occur slippage, fast-moving markets, something could go wrong. And there's always that risk that you could lose more than you have intended with your well-executed position sizing and money management. The good news is that the binaries and spreads here at Nadex are fixed risk. The reward is also fixed, but really most crucial, the risk is fixed. Both the upside and the downside are capped. And you get how much you can risk, or how much you can lose, how big your risk is every single time you raise your orders. That's called here a risk-first trading habit. You know your maximum risk before placing any trade. And while usually trading conventional instruments, here at Trade with Precision, we always recommend that people get out of their positions, out of markets when some high volatility news events are about to happen. Just think about Fed interest rates announcements, the Brexit vote, stuff like that, gross domestic product numbers being released, all those news which have potential to move the market really big time. If you can't control your risk, you want to be out of that market before the news hits. Here with Nadex, you have the perfect instrument to be trading exactly those news announcements. Your risk is limited. No matter how big the market will spike, how big the spike will be, it doesn't matter. In the end, it's really, you see what you risk, and your risk is completely capped. absolutely great product to trade around those news announcements. The value of a binary option is always between $0 and $100. So essentially, with just a risk under $100, you could trade most contracts here at Nadex. Time value risk. When trading binaries, time value plays a significant role. That's just like plain vanilla options. It's not really something binary specific. Every option, and so also a binary, has an expiry, which means judgment day, at that point in time, we will decide is that option in the money or not. And depending on how much time is left until this expiry is about to happen, the more value that option holds. That's time value. And this time value can work both for you and against you. If you want to trade a quiet market and put time on your side, you probably will get a lower reward to risk ratio in order to have time decay working in your favor. And in the money contract does not require a big market move. Essentially, you just want time to tickle by and it's gone and you're good. You have a winning trade. On the other hand, trade a volatile market for extra potential reward before expiration. Higher reward risk scenarios for assuming the time decay risk. There's more movement, there's the spikes are bigger. That's what volatility is doing. Low volatility, it just doesn't move. It's the old trusted horse which just trots along and nothing really fancy is happening. On the other hand, that volatile market, high volatility, that's the young horse, the young stallion. He's kicking and jumping and everything. There's more action. And in order to reflect this, higher volatility means higher option prices. An out-of-the-money contract requires a bigger market move. Sure, but with higher volatility, again, this becomes a little bit more likely. We have special intensive binary options webinars for more information exactly on those aspects. We don't want to focus there too much today. Focus today is rather on the trading strategies. Money management risk. As I said, you want to ensure survival in the markets. You want to make sure that you are still there tomorrow to come and trade and try again. I explained to you guys already the positive expectancy on every trade. It's critical to achieve sustained success. You want to profit more often than you lose, or preferably both, and more profit on your winners than losses on the losers. Very well-known trader and book author Alexander Elder. A good trader watches his or her capital as successfully as a professional scuba diver watches his or her air supply. That's what you have for your work. That's what you can do, what you can work with. The money in your account are the tools. You really have to protect those. All right, so let's have a look what we have here. Let me grab my laser pointer for that. Spreads and binary options both have fixed risk. We have the spread on the left side. Let me just quickly check. No, we have the binary on the left side here. This is the binary, and we have the spread on the right side. And here, when you want to raise those orders, and you tell the system if you want to buy or sell, and how many you want to have, and you get the price and put the price in, you can immediately see what your maximum loss on that trade, on that position could be. In this example here, your maximum loss, you're buying a contract for $16.25, and this is worst thing that this could happen. What you have bought now for $16 is going to zero. So this is your maximum loss. On the other hand, if the market moves your way, which means it will be trading above 4,420 at this point in time, then your maximum payout will be $100, your maximum profit will be $83.75. Same logic applies here for the spread. In this example, our maximum loss is $153. The maximum profit is $247. But you see those figures immediately when you raise the order. There is no fancy calculation needed or taking values from a chart, it just doesn't matter. You see exactly when you raise the order what your risk is. Very powerful feature. Can you still profit by risking just 1%? We get this question all the time. Don't think about your winners. Think about your losing trades. Usually people end up having a lot of small winners, and then comes a large loser. Probably also is not closed at certain price levels, and it's just this hope of, oh, it will come back, it will come back. I'll close it when I break even. And this is usually what wipes out accounts. The best traders focus on managing risk, and poor traders focus almost entirely on reward. If you want to have a good read, I recommend the book from Jack Schwager, the Market Wizard series. He interviews top traders, and you think, as they are all very successful in the markets, they all have found this holy grail. They're all doing the same thing. No, they're not. Everybody is trading a completely different style. The one thing they all agree upon is risk management. And those figures, what they are risking on their trades, that's in that same area around this 1% that we are proposing here. It's all those guys are just thinking in risk. They don't want to lose money, and they rather stay on the sideline in order to avoid a losing trade. The only thing that you can influence is, again, flawless execution of a defined strategy over the long term to gain consistency. And over this large sample set of trade, then that edge in that system, this positive expectancy, should play out. Trading strategy. What is our trading strategy? What makes a trading strategy? So let's have a look at this. We always have this picture, and we teach that picture. The building blocks which are being used within our strategies are our ingredients. And we are looking rather for reasons not to take a trade, certain aspects on the chart that keep us out of that position, and we always call this more cons than pros in the traditional sense. And of course, if we're talking about ingredients here, we're always using that picture of baking a very, very tasty chocolate cake. And this picture already makes clear, if you have the perfect butter, if you have perfect flour, perfect eggs, and just one of those, this will never be a chocolate cake. And it's the same thing with when it comes to trading. You could have the perfect candlestick skills, you could have the perfect understanding of trends, you could have the perfect understanding of moving averages. They won't really help you to make money. You have to put those different ingredients together. They have to occur at the same time. You have to combine them so that they really can excel and show all their power and their potential. And that trading and that recipe that we need in order to know how to combine those different ingredients, that's our trading strategy. We think it's essential for our trading success. It combines multiple technical factors and turns the different ingredients into a recipe. Out of many is created one powerful strategy that's doing what we expect it to do in the market. Technical analysis alone never does make money. It's how you apply this technical analysis, which means the strategies. And the strategies, they do help us to make money. If you have read different books on trading, Trading 101, Getting Started, no idea what they're all being called. They will teach you about head and shoulders, double tops and bottoms, cup and handle patterns, triangles, hammers, dojis, and you see all the rest. Dead crosses. Every time the market shows this dead cross, the guys on CNBC are, oh, the market has shown the dead cross, we're all doomed. This is a lagging indicator. This means the market has been tanking since at least, depending on the time frame, since at least a few weeks. And suddenly they realize, oh, we might be going down. All this stuff, I would like to say it's not working. If it's working for you, by all means, if you have something that is working for you, stick with it. For us, it hasn't been working. And as we're trading our own accounts, we really like to have something that is working. And for that reason, we are not using all those different tools. We have a few core building blocks. Rather simple. We sometimes get the feedback, guys, this is not advanced stuff that you teach here. I don't care if it's advanced or not. I don't want to be advanced. I want to make money with my trading. And as long as these strategies are making money for me, that's what I will keep on doing. I don't need fancy indicators and charts with hundreds of subplots and bells and whistles and nobody understands anything. It must be simple as possible, but not simpler than that. And I really feel comfortable with our strategy. So if you have read all that stuff, I kindly ask you now to forget everything about it. What we are using, we think we have to focus on what truly matters. And this is always the charge. Who is currently in charge? Who is calling the shots? Are the bulls in charge or are the bears in charge? Is it a bull market with running up prices, or are the bears in charge driving prices lower, complete seller domination? What is the big picture? What's going on? And while this is interesting for the complete market and trend that is determined by that, we also look at one candle at a time, at one session at a time. And again, the question remains the same. Who has been in control? Who controlled each candle? Has this battle been won by the buyers, or has this battle been won by the sellers? It's all about this constant tug of war, of this push and pull. Who's currently calling the shots? And as a result, you will really easily and fast see if there is an uptrend, a downtrend, or no trend. We want to use leading indicators. We want to predict. Do we absolutely know what's going to happen in the future? No, absolutely not, by no means. But using those indicators in the way we are using them, we have tweaked the odds a little bit in our favor, which means we should be right more often than not. And in the end, that is all that we need when it comes to implementing that trading strategy properly. Trading strategy, we want to combine this technical knowledge and all those different components which form our strategies. We want to have a precise entry. It's not, that must be as precise as possible. Not guessing, not hoping, no. Once I have identified my pattern, I know exactly where I want to get in. And equally, if not even more important, I know when I want to get out, stop loss level. And I want to know where my profit targets are being hit. Now, the stop loss level probably is not so important if you want to trade this market using binary options, because as we have learned, our risk has been built in. Nevertheless, for those strategies, and as they are applicable on any market, any time frame, and also any instrument, knowing this proper stop loss location also makes sense. And once you've understood it, it's just straightforward. So, what's the anatomy of a strategy? A set of rules defined in advance, representing an edge in the market. In advance, we don't change those rules while we are in the market. I don't like it right now. I feel really I should be buying. My rules don't help me to buy right now. I'm tweaking it. No, that's not how it works. You want to be as emotionless. You want to be as robot-like as possible to really just execute that strategy. In a perfect world, you just don't care if this trade that you just put on is going to be a winning trade or not. You just look for the next opportunity and put on the next trade. Next trade, next trade, next trade. You just follow through. No time for emotions. Don't feel bad about a losing trade. And I think equally important, don't feel like the greatest hero in the world if you have winning trades. I know that part is fun, but it's just feeding that same beast from the other side. So try to get emotions as much out of the trading game as possible. If we have everything in advance that we need, we can plan out the trade before it happens. We always call this, we want to plan our trade and then just trade our plan. Once you have made the decision that this is a trade, you know everything in advance. Once you are in that trade, once emotions are running high because now you have a running profit and loss, you have a running P&L, but that's okay, but you don't have to make any decisions. You just, you can watch how it plays out. Identify and trade the market characteristics that reoccur frequently. Now we have our patterns. And we are looking, of course, for patterns with a high probability of success. But those patterns are being defined by all our building blocks, and they happen in the proper context. Use repetition in the market to achieve consistency. If you're just playing, if you're just tossing a coin, it's either a win or a lose for you. A win or a loss for you. But if you toss that coin 100 times, 1,000 times, you can expect to have as many winning tosses as losing tosses. And this is expectancy. So never judge from just having one coin toss, one trade. Always come back and look at that large sample set of trades that you did. And only then, and if those trades are comparable and you achieve that only with consistency, only then can you see if you have executed really flawlessly and if you are doing this job properly and if you are a good trader. Touched upon this several times, you want to control emotions in trading. Part of the strategy, really crucial, easy to overlook, but yeah. Trade with a level head, trade with simple logic, and manage risk. Stay focused, just as little emotion as possible. The only thing that you can control is flawless execution. Practice, aim for that flawless execution. You want to establish consistency over a large sample set of trades. I'm stressing this really heavily because this is really, that's the core part. That's expectancy, and this is where, in the end, your profits will be coming from. Profitability in trading comes from consistent execution over time. So what are we using for our trade setups? We are looking to use trends. Trends are the most important part where our strategies are trend-following strategies. No trend, no trade. We're looking for true support and resistance levels. Very important, an achievable and positive reward versus risk. It just doesn't make sense for us to risk $1 in order to be able to make 50 cents. It doesn't make sense. I want to make, if I'm risking $1, I want to make $1. Preferably, I want to make $2 for every dollar that I have risked. We would like to demonstrate now a simple price action analysis and how this can form a complete trading strategy. So let's have a look at this. First thing is we want to assess trends. This time it's the US dollar against the Japanese yen, and it's an uptrend. How do I know that it's an uptrend? We're making higher highs and we're making higher lows on the pullbacks. And as long as we see that, it's an uptrend. Higher highs and higher lows. On the other hand, here we have euro against the US dollar. It's a downtrend. Why is it a downtrend? We're pushing lower. The highs that we make are lower highs, and the lows that we make are also lower lows. Lower lows, pullbacks to lower highs, lower low, pullback to a lower high. As long as this happens, that's a downtrend. I only want to trade this to the short side. True support and resistance. Probably you will have seen lots of charts with sloping trend lines. If you compare the reliability from sloping trend lines and that of horizontal flat levels, no slopes, just flat levels, true resistance, true support, you will see that the market reacts to those far more often than to the sloping ones. We weren't really able to gain an edge in using sloping trend lines for our trading. That's why we don't use them. We just use true support and resistance. We have two touches of this level here, one precise touch, the other quite close. They're trading below this level, so it's resistance. In this example here, it's support. We have one precise touch here, market bounces back, tries again. This level currently is acting as support. The more level and the more touches of these levels we see, the more important, more significant those levels will be. Trend resistance in an uptrend is formed at the prior high, but this is not true resistance. Price is pushing higher here, takes out this previous high. That's not true resistance. We don't really pay that much attention to breaks of those. Yeah, I want to call it level. It's not a level at that stage. It's just that's one touch. That's an old high, and yeah, I know it's there. I know how to consider it with my risk calculations and with my setup assessment. But apart from that, I couldn't care less that this is a high. Definitely no resistance. The same thing is true in a downtrend for the lows. They do not form support. It's really just, it's an old low. Support and resistance, some golden rules. You can see here that on that chart we had resistance here. Price tried to push higher, didn't work out. Tried again here, bounced back, and finally broke above this level. And now it comes back to test this level 1 time, 2 times. So you can see this level stays on the chart. It's not that once resistance has been broken, it's gone. No, once resistance has been broken, it becomes support. Very important to watch those levels on multiple time frames, especially higher time frames, and get a feeling to those areas where price will react upon. Same thing here. Resistance, 1 touch, 2 touches, very close here. We have broken above that resistance level, and price comes back to test this level once again, but now this level is acting as support. When resistance is broken, it becomes support. When support is broken, that level becomes resistance. Those sloping trend lines that I mentioned, you can see here several ways to draw those trend lines, and we think it's rather subjective. They form or create rather messy charts, and even if you draw them correctly, swing out method and so on, the market doesn't really react to them so strongly. And the next thing is, as they are sloping, they have a different value for every single next bar, next candle that is being printed. And for that reason, you really can't plan ahead and decide where, at which price level really do you want to enter. And the way how you draw them comes also down to it's rather subjective, and if you really don't draw them very, very cleanly, 2 people drawing those levels on the same chart will probably end up with different levels. Those horizontal levels, true support and resistance, they will be the same on pretty much every single chart of every professional trader that you have a look at. So, just having had a look at those small building blocks, we already can formulate our trading strategy here. Our recipe, we want to trade breaks above or below a flat horizontal level. We only want to trade those breaks in the direction of the trend, and we want to place stops with strong price action support protecting them. And when we raise those orders, we want to risk a maximum of 1% of our capital on each trade. That's just a subset of the complete rules for our momentum breakout trades. The momentum strategy is covered in the advanced education course. Everything's there, all the checklists, all everything, nothing is hidden. You don't have to purchase anything, so no worries there. It's just now, as we are already quite pressed for time, I really tried to speed it up. Sorry about that, but I think it might be likely that we will have a short overrun. I'll do my best to just gain a little bit more speed. Other precision momentum ingredients in our strategies. We're looking at moving averages. No, we are not interested if those moving averages cross each other, or if price touches or crosses those. We are using our moving averages as leading indicators. We don't trade in hindsight, we trade in the here and now, we trade in real time. We are applying advanced trend analysis, when to trade and when to stand aside. Really, trend is everything, it defines the context for our trade. If the trend is not good, not pronounced, not really there, I'm not interested in that market. All those different factors that we identify stack the odds a little bit more in our favor, which means if we really are able to check all the boxes of our checklist, this could have turned from a normal setup with a maybe 50 to 50 chance for being a winning trade. We have turned it maybe to being a 55 to 45 or 60 to 40. Depends much on the trader and the skill set and experience, of course. It's a craft after all. But everything we have identified stacks the odds further in our favor. Stephen's asking about the periods we use for the moving average, SMA or EMA. Stephen, the way we are using them, it doesn't really matter if you're using a simple moving average or an exponential one. Try both, see what you personally like best, and then stick with it. And the periods we're using are 10, 20, 50, and 200. So you see, that's not rocket science. And by all means, we're using those same periods for all markets. For all different markets and all different time frames. We do not drop those periods when we go to 5-minute charts or something like that. It's the same thing for all, because in the end, I think price action is pretty much a fractal. It's self-similar, and those patterns that we want to see, we see those patterns on 5-minute charts, on 5-second charts, and on monthly charts. It's the complete spectrum. So as soon as you would start to touch those parameters and change the values, I think you would be in for curve fitting, and that's just trying to look good in hindsight, but not really being actionable for the future. All right, so next thing that we include in our strategies are candle patterns. No worries, I know that Steve Nissen and a lot of other guys tell you you have to learn hundreds of different candlestick patterns and names and formations. We feel it doesn't make sense for you to do so. We think 3 candlestick formations are important, and it's just that. And again, it's not about learning this stuff, it's about understanding the reasoning why we think they are the way they are, why we deem them to be important, and that's it. Chart patterns, just one pattern, forget about shoulder, head, shoulder, the triangles, the flags, and all the other stuff, the cups and handles. And I already told you guys that our strategies are applicable to any time frame. Not only that, but we use multiple time frames when we assess the quality of a setup for one market, for one trade. We look at multiple time frames, and the reason for that is just the same thing as before. We were looking for multiple reasons to take that trade. We want to stack the odds even further in our favor. Stephen, thank you very much for the feedback. Really appreciate it. All right, let me just quickly scroll to the top here. All right. The Nadex contracts, of course, make it possible to trade the momentum strategy on multiple asset classes. That's really the nice thing. First step, you need to have a plan. If you want to trade or not, if it makes sense, and if you say, yeah, I want to go long in that market, then you look at, okay, what makes most sense, which kind of instrument, and binaries might be just the perfect instrument for that. But first you have to arrive at that conclusion and decision, I want to be trading that market. All right, next slide. Trading with convergence of a trend. We want to know when to ride the wave. We're using few indicators, and we're not using them in the conventional way. We are looking to use them as leading indicators, and this is an idea to give us an indication if price momentum and indicator momentum are pointing in the same direction, and everything is really, the sea is as calm and nice as it looks, or if there's already some thunderstorm brewing up on the horizon and there might be trouble ahead. We use indicators for that. We couldn't care less if our RSI is overbought or oversold. Again, that's in hindsight. Convergence of the trend, divergence of a trend. Yeah, that's that thunderstorm showing at the horizon. we think we see signs that this trend might be weakening, that this trend move might be coming to an end, and this will usually keep us out of potential trades. Let's have a look at this example here. Momentum, long trade. List the technical reasons for long trade. Is there a trend? Yeah, sure there is. One thing many people, and also I myself had an issue with when I just got started here with this method. You want to see the big picture. You want to see everything and look at everything. No, you don't have to. You start at the right side. You start at the right side and just see, wait a minute, yeah, we're pushing higher. We have a low. This low is a higher low than what we had here. We're pushing higher again. Actually, we're not really pushing higher. We have somewhat of a flat level. We have some kind of resistance here. But the big picture here for the last move is definitely pushing to the upside. So yes, we have a trend. And as we saw that this high is not really a new higher high, but rather a same high, we already see that we do have our flat level here. And we have 3 touches of this level here. We have a slight overshoot there. And here in this area, we get also further confirmation of that level. This price level seems to be rather important looking at that market. All right. So what info is missing here? And what is the risk? Yeah, of course, we would like to see also higher time frames, see what the big picture is, see what's going on there. And the risk, we have to take we have to find a spot on that chart which defines, let me explain it differently. We are pushing higher, we are in an uptrend, and for this uptrend we are seeing higher highs and higher lows. And as soon as we no longer see higher highs and higher lows, then this trend has come to an end. And I no longer want to be in a market pushing, I no longer want to trade this position to the long side if I have this impression that the market might not longer be in an uptrend. And the proper point to place that stop loss would be just behind this recent swing point low, between this recent higher low. Because if we fail, if we break down to break below this low, we're actually making a new lower low. We have a higher high being followed by a lower low. I don't know what it is, but it's definitely no longer an uptrend. So I want to be out of that trade. And this is why this is the proper location for our stop loss. And so trading this market with conventional instruments, this here would be the risk on the trade. I enter here, and this here is my stop loss location, so that distance here is my risk. All right. What is the potential reward? You also have to think about, as I said in the beginning, you want to know when to get in and when to get out. And this get out, we had this get out scenario now for everything went against us, but now when do we take profit? And in this example here, we could place this as our profit target, and you can see it's 1.5 to 1. We took this distance here, painted it here to the upside, extended it by 50%, and this is what we are looking for here as our profit target. We know all this in advance. It's not that I enter the trade and wait, and if it's trading here, I think it would have been good to sell here. Or if it's been trading there and coming back all the way, no, everything is completely laid out in advance. So this is what happened next. We have tested this level here several times, 3 times, and now we get the breakout. And you can see that this breakout occurred rather forcefully and heavily, and we continued to push higher, and we carried on higher high, higher low, higher high, higher low, and so on until finally we reached here our profit target. Check and compare those types of binaries that you want to trade. One of the huge benefits here at Nadex is that you just are not, you're not only able to open that position, but you can trade this position like just any other instrument, which means you can close that position here at that level. If it's trading at 88, you're able to close that trade, that position. You don't have to wait until expiry is there. If we are here now with a 1 to 1.5 risk-reward ratio, I close that position. Everything is fine. I hit my profit targets. No need to wait a few more hours, or depending on the life cycle of the option. In that time, anything could happen. Could go down to zero. I'm not interested in that. When I have my profit, I can close that position. And here at Nadex, of course, you can use limit orders. Again, you place that order, and once you are filled, you immediately raise those orders to take profit and stop loss, and yeah, you're taken care of. Now, let's have a look at another example. Again, momentum trading strategy. Is there a trend? We're definitely pushing higher highs and higher lows. What is the trend? It's an uptrend. Is there a flat level? This here looks pretty flat to me. There it is. We want to see convergence on MACD. We want to see that MACD is holding its ground and pushing higher as we are about to break out. And here at the last part, you can see it's picking up momentum again. RSI is picking up momentum again to push higher as we are about to break out. So MACD and RSI are converging. Is the stop protected? We can take this here as our stop loss level. That's the recent most significant swing point low. That's my stop location. I want to push higher. Is the stop in a logical place on the chart? Yes, it's just behind the swing point low. Is there a good reward to risk ratio? If that's my risk here, I'm just taking again. This time it looks like a 1-to-1 target. So we go there, and this target has been reached. The trade has, again, with a limit order, easily to be closed out as a winning trade. Next example, momentum short trade on a 15-minute chart. And you see we're using different time frames for those charts. And it's the same checklist again. List the technical reasons for a short trade. We would like to see a trend. This here is a clear, very nice downtrend. So the big picture that we're getting here is we are clearly pushing lower. And also here on this recent move, we are also, you can see the series of falling lower highs. Again, pressing against this flat level down there. Yeah, there is a flat level. There's a downtrend. We clearly have down momentum. Are the indicators convergent? You can see that we are, for every touch here that we have here, MACD keeps on falling and pushing lower. Clear, strong convergence here to the downside. And same is absolutely true here for RSI as well. What is the risk? Proper stop loss location would be here. And the potential profit target. And we get this breakout to the downside. We push lower. It's gone a little bit sideways here. So there was a time of not sure if this is going to play out, but in the end it broke down, hit first profit target, and hit second profit target. In the advanced course, you will learn about having multiple profit targets and working and how to scale out of your positions and make sure to log in profits and all that good stuff. It's not here on a slide, but I definitely want to make you guys aware. Those have been 3 winning examples. I do not want to suggest that we only have winning trades. Everything could have been perfectly fine on those charts, and they could have also been losing trades. I don't want to make you guys think, wait, that's the holy grail. It's a very good system, but it's not, and it doesn't have to be about only having winning trades. Just keep that in mind. All right, we are already quite pressed for time, so I would like to give you guys a very short introduction to the Nadex Advanced Education courses. All right, here we go. A 4.5-hour educational package presented by my colleagues and myself here at Trade with Precision. Don't worry, it's not one block, 3 installments, convenience from your home, and you're good to attend those webinars. You're good to attend those live webinars as many times as you want to. Of course, you could easily visit our Trade with Precision homepage and look around and start shopping there for our educational packages. You would find something with a similar content. Would cost you around about $900. Don't do this. If you're a member here at Nadex, you get it for free. It's an easy save, $900. I don't see how something like that could be wrong. What's being covered in those webinars? In week number 1, we want to focus on the technical ingredients. How to correctly implement technical analysis. What technical analysis tools are we using? We briefly touched on moving averages and candles, for example. Didn't play a role here today. You see, we're already running over time, and we left out quite a bit. There is so much more time to really focus on those aspects. Very important, detailed trend and price action analysis. That's our environment, that's our context. We must understand what price action is doing. Swing trading versus day trading, pick your time frames, and the technical ingredients to focus on, and again, those to ignore. So head and shoulder and all that stuff, not that important probably. In webinar number 2, we will combine those ingredients to form our trading strategies. Looking at multiple time frames, again, to just stack the odds further in our favor and to improve our probabilities of having winning trades. And you will learn 2 decisive trading strategies: the momentum breakout strategy, which is building upon what you have heard today. And the second setup is our trend flow strategy. Attend as many sessions as you like, as many times. Again, as long as you're a member here at Nadex, you're absolutely free and no cost involved there. Webinar number 3, we want to focus on spreads and binaries in action. Obviously, it's a little bit, getting those strategies right is one thing, but then how to apply those strategies with binaries, and due to the nature of binaries, makes sense to focus on those aspects there as well. So we will see those Nadex contracts in action with real live trade screenshots and scenarios, both the momentum breakout trades and the trend flow trades. Gaps, news trades, all that stuff that usually you definitely want to avoid suddenly becomes very tradable and become huge opportunities once you're employing binaries and spreads here in your trading strategies. So definitely we'll be looking at gaps and news trades there as well. Live market scan for trading opportunities. This is always a bit of a, if the market doesn't give us anything at that point in time, that part can be rather, but that's just part of the game, that's just part of trading. If there is something happening, that's always great fun. And good time being spent. Nazi is asking, where do we get to? How do we get access to those sessions? My understanding is that everybody who has signed up for today's webinar will be informed once those advanced courses will be on rotation again. And so, actually, I think there's nothing for you to do. You will be informed once those webinars are coming up, and then you can directly sign up from those emails. Utilizing Nadex contracts to full effect. Our strategies and how you can trade them with binaries and spreads to create a fixed risk momentum trade. Fixed risk, really great feature of those products. Trade with the market flow for the highest probability trade setups. Evaluate reward versus risk scenarios prior to entering the trade. Remember, plan your trade and trade your plan. And then finally, use Nadex contracts to trade market patterns with your preferred reward versus risk. Select from multiple reward versus risk scenarios on each trade. Obviously, here it's about picking the proper strike price. How far deep in or deep out of the money do you want to be with the options that you want to be trading? All right, so in summary, to trade with precision for us means to flawlessly execute every trade in accordance with your strategy. Further, flawlessly manage all trades in accordance to your money management rules, and to have a strategy that represents an edge in the market that, when executed correctly, can provide an advantage over a given number of trades. Jesse Livermore, famous trader, investor at the beginning of the 20th century, Wall Street never changes. The pockets change, the stocks change, but Wall Street never changes because human nature never changes. And this is what we do. We trade price action, we trade human nature. Because in the end, what you see on those charts is just the decision that humans have made in the market. Take your trading further with Nadex. if you aren't a member of Nadex yet, sign up for that demo account. Just give it a shot. Have a look. Play around with the platform. Really powerful. Great fun way to experiment with everything. 14-day demo accounts are available. Of course, current members, just log into your account and commence trading. And new members, be in touch with Nadex if there are any questions. They're more than happy to help you. That's what they're here for. And yeah, that's pretty much it. So, all right, everybody, we have shot over time about 5 minutes. Sorry about having to rush a little bit towards the end. Are there any questions right now you want me to answer? We seem to be good. There seem to be no more questions. So definitely, thank you very much for attending today's session. I really enjoyed it. I hope you guys learned something new. And I will see lots of you guys again once the advanced course comes up.